Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB as we wrap up this Friday and the week here at AusBiz. I'm Andrew Gagan. Thanks for joining us. Well, let's get to the markets, and we've eroded a lot of those gains we've seen, well, not just this week, but across the month, it would seem. CBO 200 off by more than 0.5%, more accentuated what we're seeing on the ASX 200, off by around 0.7% to be, well, flat for the week, as it turns out, where we're at right now, and perhaps up by around 1.5% over the course of January, this being, of course, the last trading day of the month. Let's get to the themes then of the day. Friday Fizzler, I think that pretty much sums up what we've seen in today's trade, given we have, certainly in the afternoon, lost a lot of those gains we've made more recently. Earnings also Goldways, yeah, can't miss that. Well, we know how well gold and precious metals in general, in particular silver, even more impressive the gains they've made since the beginning of the year. That has come off significantly overnight, significant profit taking going on in that space. The question is, will they continue to fall, or are we going to find some sort of base? And earnings expectations, it all gets underway locally next week, already getting some results in. We had, notably today, ResMed, which proved to be positive. All right, let's get to the sectors of the day. Let's start with gold then, given that has been the big mover. Let's see how that translates to the miners. Some heavy losses there. Newmont down more than 7.5%. Genesis Minerals hit hard too, close to 10% lower. More generally among the miners, it is red across the board. BHP and Rio also taking a tumble. Fortescue off 3.5% as well. And the lithium miners hit hard. Mineral Resources off 7.5%. The banks proving to be a bright spot. So we are seeing all up in the green. Macquarie just holding that. And in the tech space, well, we know that that's been under tremendous pressure. That has continued. Wisetech off 2%. Zip almost 4%. And healthcare very much buoyed by what we've seen for ResMed today. That's not on that list, but CSL also doing very well, along with Cochlear up 3%. Let's get to some of those stories. I'm mentioning ResMed says its strong global business delivered a rise in profit over the December quarter, beating analyst forecasts. PLS eyeing its best day in a week on a revenue upbeater. In fact, well, that's no longer the case. The shares are down now. Nine surging on a pivot to digital growth, offloading its radio assets. And Star Entertainment hitting a 1 month lows. Available cash depletes, and Elders expected property prices to moderate this year, although it also expects them to keep rising at the same time, if that makes sense. Its shares are up 2%. All right, well, let's unpack the week that was. Joining us, Shane Oliver from AMP. Shane, happy Friday to you. Now, of course, so much speculation about what the RBA is going to do next week. This stems from that quarterly read on inflation we got. How are you interpreting those numbers you're seeing?
Well, differently. My initial interpretation was that the Reserve Bank would most likely raise rates. On thinking about it a bit more, we've come to the view that they probably won't, but it is a very, very close call. And I recognise we are in a minority there. There are a few economists saying that they will hold, but I think there is a strong argument to hold. We have seen a bit of a downtrend in the monthly trim mean. We've seen the quarterly trim mean step down from 1% to 0.9%. We've seen the Aussie dollar rise to around 70 US cents, and that, of course, is a de facto monetary tightening. We did see some slower increases in the month of December for both rent and new housing costs. And consumer sentiment, we know, has taken a bit of a hit recently on the back of all this talk about rate hikes. So I think for all those reasons, the Reserve Bank should hold, and we think they will, but it is a very close call. And I respect the views of other economists out there, and it is very important that we keep inflation under control. I know inflation is above target, and that is an issue. There's concerns about excess capacity utilisation in the economy and so on. So I think it's a very close call. I'd say it's almost 50-50, but after much debate, I and my colleagues, Diana and Mibu, decided that we'll opt for the no change view, but it's not a view that I have a lot of confidence in. If we do see a hike, though, on Tuesday, I think it will be a case of one and done. And I would also point out that several other countries around the world have seen a bit of a spike in inflation, not a spike, but a bit of an uptick in the second half of last year, and then it settled back down again. Just think of the UK, US to some degree, a bit different in the US with tariffs, and of course Canada. And so I'm quietly confident that inflation will settle back down again, but I can understand why the Reserve Bank would be feeling nervous about all of this.
Shane, do you think they made a policy error? Certainly, perhaps, should they not have cut as far as they did? Should they have waited perhaps longer? Was their modelling or their assumptions wrong to begin with?
No, I don't think they made an error. I think they have to act on the basis of the information they had before them, and that was one of a lengthy per capita recession, very weak economic growth, and on their modelling, monetary policy was still tight, and of course the inflation numbers have been trending down quite sharply. Then, of course, more recently they've had a bounce back, and the shift to the monthly has maybe confused that a little bit. We don't quite know, but by the same token, you can't entirely ignore that monthly. You just put the chart up there for the trim mean monthly annualized increase. Obviously, it's very volatile, but we saw that big spike that occurred in the month of July last year, and since then the trend has been down, almost back to levels that prevailed prior to that spike. And I don't think the RBA should ignore that. So I don't think they made a mistake. I know it's easy to say these things in hindsight, and some economists will say that, but I guess that's their opinion. But I think it's very hard to criticise them for acting the way they did last year, when it seemed pretty clear to everybody that inflation at that point in time was coming down.
Shane, let's look at the bigger picture. Certainly globally, there's so much at play. This last month, January, has been something to behold, hasn't it? Certainly courtesy of Donald Trump and others. But I guess particularly with risk assets, what do we need to watch for, given, look, there are some significant risk events ahead. In particular, Donald Trump expected to announce the new Fed chair within the next 24 hours. Plus, of course, there's that threat that he's looking to strike Iran.
That's right. I mean, every week since I've come back to work, and even the one before that, has been packed full of stuff, most of it emanating from the US, with wars and threat of civil war in the US. I've seen surveys now where people are asked, do you think there'll be a civil war in the US after what was happening in Minneapolis? And obviously geopolitical threats, which have bounced around all over the place. We start with Nigeria, fairly minor in the great scheme of things, Venezuela, Greenland, Iran. Each week seems to have a new one. So I guess I don't know who it's going to be next week. But each week has a new one, even though this was meant to be a president who didn't get involved in foreign adventures, but he certainly is. So that creates a lot of consternation and nervousness for markets. We've seen the oil price, I think, after Venezuela, all that optimism that there'd be a massive supply boost to oil, saw the oil price fall in US dollar, West Texas terms, down to around $55, $56 a barrel. Now we're around now we're around 64, 65 US dollars a barrel. So quite a sharp spike there. And obviously concerns that if the Iranian regime or government, whatever you want to call it, is threatened, then they'll say, well, we've got nothing to lose by disrupting other countries' ability to export oil from the region. So that's what's concerning markets, of course. Then we've got this pending announcement about the replacement for Jerome Powell in May, Trump's nomination. Earlier this morning, the report was he was going to announce it next week, and then, of course, he can't help himself and says it's going to be Friday morning, and then the betting all switches from Rick Ryder, I think it is, BlackRock's CIO of fixed interest, to Kevin Walsh, former Fed governor. And that seems to be what the markets are reacting to, this feeling that whoever Trump puts up will be more dovish in the short term, but longer term, maybe Walsh will be far less dovish than say, Kevin Hassett would have been. And that's seen this pullback in the US dollar, a fairly minor one so far, and pull down in gold and silver. And the Aussie dollars come from 70.50 at earlier today to now around 70 US cents. So a lot of volatility in relation to, I think a lot of it is overreacting, a lot of it's profit taking, investors have seen big gains in gold and silver and the Aussie dollar and big falls in US dollar, and so this just acts as a trigger. There's going to be a new person at the Fed. Looks like we'll know that person. Maybe we should take some bets off. And that's, I think, the main thing occurring here. Yeah. But the one thing we know from all of this is that a couple of things. One is Trump does face constraints. It is an election year. That means the hurdle to backing off or doing a taco or tuna, as people say these days. Trump always negates, I forgot what the tuna means now, negates his threats or something to that effect. The hurdle to doing that is a lot lower these days because of the midterm elections. And so that's why share markets aren't too worried about it all. But at the back of people's minds, I think, is this ongoing view that there is going to be volatility, there is going to be noise, and that all supports the case for gold and silver and others in your portfolio, even though those things got a bit ahead of themselves.
Yeah, I was trying to unpack that for you, Shane. It was actually Trump usually negates announcements.
That's it, announcements.
Well, and your point is that so January goes, so the rest of the year. I mean, we can expect that volatility to continue.
Well, that's right. When I wrote that, I had that line in my note this morning, which you've read. The Aussie share market, when I first wrote it out this morning, the Aussie share market year to date was up 2.7%. When I last looked, because we had a 1% reversal today from gains at the start to now down, it's 1.7%. Whatever, it's a positive number. And the history has been since 1980 that if you see a positive January, then it goes on, I think, roughly 80% of the time to give us a positive year as a whole. So that's a positive sign. We saw the same thing last year and it turned out okay. There's no guarantees, of course. There's always this 20% risk that it doesn't work out that way, so that could well happen. And I think this year will be a volatile year. So far it's been very volatile in terms of noise, but not so much in terms of markets, although today is an exception to that. But I do think, if you read the very back of that report, I do think we're going to see another 15% correction somewhere along the way this year, just as we did last year. We'll see another rough patch in there, which I think will unnerve investors somewhat, but ultimately it sort of turns out okay, as Trump has to pivot towards providing support for US households and consumers. He focuses more on affordability. The Fed ultimately probably cuts rates, once more, maybe twice more, probably at least 6 months away yet. And global profits remain okay. And likewise in Australia, we go from 3 years of profit falls to a year of profit hikes, which I think we will see. So ultimately it turns out okay, but I think it's just going to be a rough year.
All right, well, we'll certainly spend this weekend girding ourselves for more volatility, particularly that RBA decision next week. Shane, great to catch up. Thanks for joining us on AMP.
Thanks, Andrew. Take care.
Well, let's now turn to our stock of the day. And it was ResMed off the back of its quarterly update. Our experts Luke Winchester from Merewether Capital and Richard Hemming from Under the Radar Report gave us their take.
ResMed really is a strong company. Like, what we liked there was we saw the revenue up 11%, net income up 14%. So really what you're seeing improvement in gross margins, and that's a sign of just how strong this company is. Like, we've been backing SomnoMed, another sleep apnea specialist, but well in the small cap spectrum in the past year on a turnaround, and that turnaround has sort of come to fruition a bit, but over 5 years ResMed has been the place to be.
I remember talking about ResMed in the peak of that sort of Ozempic GLP-1 fears, and the share price really came off quite hard. I remember pointing out quite a few times on the call, Andrew, that they were suffering from some gross margin weakness. Their gross margins had sort of declined from low 60% region down into the mid 50s, and it was really hitting that bottom line quite hard. Those gross margins are back up, 61, 62%. So that's where a lot of this earnings growth's come from. The business is fully recovered, and I think the market's past those GLP-1 fears as well. So I agree with Rich. I'll have this as a buy. It's not something I'm looking at every day as a large cap, but sort of 23, 24 times earnings for this type of business. That pullback over the last few months, I think, has given you a pretty attractive entry point, on that sort of medium-term view.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAM, retirement income done differently.
All right, let's get across the winners and losers in today's trade then. And IDP Education, the pick there up more than 6.5%. Night Entertainment after offloading its radio assets. ResMed off the back of its update. AMP and Centuria also on that list, whereas those that have lost out are very much in the resources space. Orobanda, Genesis Minerals, the goldies being hit hard after the gold price took a big tumble, and also lithium stocks under pressure as well. So, what's happening overnight? Well, look, the key event there is President Trump promising to announce the new Fed chair. And in the week ahead, it is a big one. Certainly the RBA rate decision will headline that on Tuesday. We also get US job openings on Wednesday, ADP non-farm as well in the US. The Bank of England and ECB rate decisions as well. And locally, reporting season gets underway, and we'll be right across that from Monday. So a quick check of where we're ending up, about 0.6% lower on the CBO 200. That is the COB. Thanks for watching and listening.